Pretty much every one of you clicked this video because either you are very new to trading and want to try your hands on, or you are stuck in between and really need to break through. Well, whatever the reason might be, let me assure you that you have landed at the right place. Profitable trading is a process that can last for years. There are certain things that needs to be learned, and later on, execution of those learnings play a vital role in deciding how your career as a trader will turn out. So in this video, we are going to understand that process. I will show you a roadmap that you can follow, and in my upcoming videos, I'll make detailed and in-depth videos from start to end covering that roadmap. So basically, it's going to be a full-fledged course for you guys. I realize that I have been making videos that are way too deep and difficult to understand if one has weak basics. So trying to cover these basic things now, so you will have a structured learning available on my channel. So enough of the talk now. Hey guys, welcome back to the channel. This is Shrish here from Trading Explained, and now without any further ado, let's begin. Many a times people ask me that I want to get into stock markets, but I have absolutely no idea about how to get started. I have no clue about the learnings that I should be taking, and hence I do not get into it in the first place. So what can I do? And this video is for them. In this video, we are going to discuss a roadmap that you can follow, and this roadmap will consist of everything. I will tell you from where to get started, what to learn, what not to learn, how to become a trader, what is the time frame that you are going to require to become a trader, and everything that you need to know you will find in this video. So let's begin. So first of all, you will need to have a demat account and a trading account to start trading. We are not going to talk about investment in this video. This is purely from trading perspective. So first of all, you need to have a demat account and a trading account to start trading. And for that, I will link Angel Broking's account to the description because I personally use it and I love it. The features are good and the overall experience is nice. So you can open the account from there if you want to. The account opening is free. Annual maintenance charge for the first year is free. So you don't have to pay anything except for the GST, I guess, which is approximately 70 or 80 rupees. And then after opening demat account and trading account, you will have to start your learnings. So we will divide our learnings into two categories. So number one will be basic learnings and number two will be advanced learnings. So let's understand the basic ones first. What is basic learning? So in basic learning, you will have to start learnings from candlesticks. Okay, so what are candlesticks? Candlesticks are basically those things that are on charts on basis of which we can analyze where the markets can potentially head in the near future. So you can find candlesticks on YouTube. There are a lot of channels who have covered these candlesticks in detail, and I am going to cover these things in my upcoming videos as well. So you can find them on my channel soon. Number two is charts. So basically candlesticks, when come together, they form charts, and in charts you will have to understand two things. So number one is supply and demand, and the number two is support and resistance. Now technically these two are the very same things. Support means demand and supply means resistance. Technically they are very same. Just the difference is that whenever we talk about supply and demand, it usually is a zone like from maybe 90 to 100, like 80 to 100, 100 to 120. We talk in zones, and when we talk in zones, it's about supply and demand, and support and resistances are levels. Okay, so like a particular level of, let's say 85, this might be a support or resistance. But when we talk about supply or demand, it has to be like from 90 to 100, this is a supply zone or this is a demand zone. So supply or demand zones are basically extended versions of support and resistance. So after understanding candlesticks, you will have to understand charts, you will have to understand supply, demand, support, resistance. And then the third thing is indicators. Indicators are what? Indicators basically are derived from the price itself. What is price? Price basically is reflection of candlesticks. Whatever that's happening on charts basically is called price. So price is basically everything. Price basically tells you everything, and you can derive everything from the price itself once you get little experienced. So until then you can use indicators. Indicators take help of price to tell you where market can head potentially. I will give you an example. Let's say you're driving a car and there's another car in front of your car, and that car is indicating a left side signal. Okay, so what do you derive out of it? You think that the car which is ahead of you is going to take left because it's blinking the left side indicator. Similarly, if a car gives a right side indicator, it means that he probably wants to take a right. But sometimes you would have noticed that some cars keep their indicators on and the drivers are not even aware about it. The indicators keep blinking and they do not go according to indicators. You must have noticed that when you're driving, right? And this similar thing happens in our charts as well. Like, indicators tell you where the market is going to head, but that does not mean it is 100% foolproof. That does not mean that indicators are basically the holy grail or they are going to tell you exactly where the markets are going to go. Alright, they just give you a hint about what can potentially happen. But there are times where indicators are wrong as well, they go wrong as well. And it's okay, because this is a game of probabilities. You have to understand that nothing in market is certain. This is the game of uncertainties. So everything at some point will be right and everything at some point will be wrong. So this is where you can start your basic journey. You can understand about candlesticks, you can understand about charts, you can learn to read charts, the supply, demand, support, resistance, switch between the time frame, try 5 minutes, 15 minutes, 30 minutes, 10 minutes, then come to 1 minute. You can switch those time frames and see what is going on in there. Then you can place indicators. Now there are two kinds of indicators. One are called leading indicators and others are lagging indicators. Now what are leading indicators? Leading indicators basically are meant to tell you what's going to happen in advance. Okay, like just 5-10 minutes before what is going to happen, they are supposed to tell you that. And lagging indicators are those which tell you after the price has taken a turn. And therefore leading indicators are a little bit less accurate because they try to predict what's going to happen, and lagging indicators are just a little bit more accurate because they derive the data from what has happened and then tell you to act upon it. Both have their own advantages and disadvantages, but it's good to know about both of them. So again, indicators are leading indicators and lagging indicators, and there are a lot of them. Okay, similar to these candlesticks, there are a lot of candlesticks. Let me tell you, I won't name them at this point because it would be confusing for you, but there are at least 8 to 10 type of candlesticks that you need to learn, and there are at least 8 to 10 type of indicators that you need to learn. So there's quite a bit of work at this point. Okay. Then after this basic thing is done, after you have understood candlesticks, charts and indicators, options open up. What kind of options? What kind of trader do you want to be? Those options, they open up. So let's see. Okay, so number one is cash. Cash basically means equity. So you can become a cash trader or you can become a cash FNO trader. So what is FNO? Futures and options. FNO is basically futures and options. So if you know futures and options, that's good. If you don't, no problem. You don't need to know that at this point, and the farther you are from it as a beginner, the better for you. So cash FNO. Then there's index trading. So index, maybe there's index option buying. Okay. Then there's index option selling, which most of the people are interested in. Okay. Then there's commodities, and the last one is currencies. Okay. So these options open up, and because these options open up, it becomes important for you to understand the kind of in-depth study you're going to do into. Because if you want to be a cash trader, there's no point learning about how to sell options. Or let's say if you want to be an option seller, there's no point to learn about how to trade currencies. So it's important for you to understand where you should be heading into, understand what is basically kind of pulling you in, what you're feeling is interesting, and then based on that, you can study the different things. So cash basically, again, as I told you, it's equity. Okay. Cash FNO is basically equity ka futures and options trading. Index options buying, this thing just avoid it. I will tell you, this is probably the most riskiest thing out of all. I will tell you why in some other video, because there's a lot of explanation that goes behind explaining why options buying is the most riskiest thing you can ever get into. And I am telling you this as an option buyer myself. I buy options, I am into options buying, but I will advise you not to get into this thing at least until you have got experience of like 2 or 3 years. Okay. Index option selling, this thing is also risky, but this is comparatively less risky if you understand what you're doing. But that is not the case in option buying, because there are a lot of factors that come into play, like option Greeks and everything, that makes it very difficult for you to make money consistently via buying options. But in index option selling, the thing is you have an edge already. There's a thing called time decay and stuff. There's a lot of explanation that again goes in explaining why index option selling is good. But yes, there's an edge that's already present with you. Just understand that. And that's why index option selling, if done with proper knowledge, can generate good returns for you. But remember, index option selling is not easy. It requires your understanding about charts, and it requires capital as well. Commodities are good if you understand how supply demand thing works. Yes, there are a lot of other things as well which are involved in it, like the macroeconomy and how the global supply demand of that particular commodity is going on, etc. But it is more or less based on price. So if you could understand price action or the candlestick and what's happening on the chart well, commodities are a good thing. Currencies, I am not into currencies that much, to be honest, so I'm not in a right position for you to tell about currencies, because I haven't traded currencies much. Yes, I have tried, but I haven't got to depth of it, so not the right person to tell you about it, but you can research yourself and find about it. So as per me, the best option for you as of now to begin with is cash trading, because for cash trading you don't need anything. Once you have opened an account, you are good to go with as less as 500 rupees, 100 rupees, 200 rupees, 1000 rupees, or any amount. It does not require you to have money. You can learn practical trading in very less amount and understand what's going on in markets in very less amount. So as a newbie, you can start with cash market. That would be good for you. And if you want to learn everything, I would not advise you that. But if you want to get into everything, then start from cash, then get into cash FNO. Don't trade directly, just understand what happens over there. Then understand how index option selling works. Then you can head on to option buying, but again, don't do option buying. As I told you, it's very risky. Then commodities and maybe currencies can come last. So this is how the categorization of traders is done. Like, what kind of trader are you? If someone asks you that question, you are going to fall in either of these categories. So now let's understand what is the advanced learning I was talking about. Okay, basic we are done with. Now advanced. Now advanced में I am going to talk about advanced learning with respect to cash trading and options buying or index options buying in specific, because no matter how much I tell you that don't go into options buying, I know that most of the people watching this video will get into options buying eventually, because market pulls your interest at that point and that's unstoppable. Like, you cannot stop anyone from getting into options buying. Anyone who spends 2 months into markets knows about options and he somehow gets into it. So even if I tell you to stay away from it, you most probably won't listen to me and you will get into it anyways. So let me tell you about it. If you get into it, what are the things that you need to learn? So number one is liquidity pool. These are heavy terms and don't get confused by it. I'll be using simpler terms to explain what all these things mean. Liquidity pool. So in simple terms, market flows like a river, and wherever there is liquidity, market will get attracted to that point. Okay, so let me explain you via basic examples. So this, let's say, is market. This is uptrend. Okay, this is going up, and at this point, let's say there is more liquidity at this place than there is at this place. So what will market do? market will reverse back or retrace back and come to this point and then decide where should the next stop be. Should it be this or should it be this? So it works on the principles of liquidity. And in simple terms, if I talk about liquidity, it is nothing but stop loss hunting. Okay, what is stop loss hunting? Now, when you enter a trade, you have to place a target and a stop loss. Okay, let's say you enter a trade at 100, then there has to be a level, a negation point where you will get out of the market if your trade goes wrong. Okay, so there are going to be logics based on which you are going to trade, and when that logic gets negated, you basically get out of that trade, and that negation point of that logic is basically our stop loss. Okay, stop loss. So this liquidity pool thing is basically nothing but stop loss hunting. And what is stop loss hunting? Now the thing is, you must have heard that not many people earn money in stock markets. Most of them call it gamble and everything, but the reason is because market knows everything in advance. Market knows where you are buying, market knows where you are selling. So if you buy at 100, let's say, and place your stop loss at 95, what market will do is market will come from 100 to 95, kick you out, and then start its upward journey. And this is a very common phenomena in markets. Stop loss hunting is probably the most common thing you will experience. There are ways to handle it, and if you want to understand more about it, I have made a video on stop loss hunting in detail. I will link it to description. You can go and watch that after this video is done. Okay, so number 1 is liquidity pool. Number 2, it's opening range. Opening range is a concept which is based on the price itself. So you don't need any additional indicators or stuff to make out what price is trying to tell you. So again, if you want to learn more about opening range, I have made a video, an in-depth dedicated video on opening range where I have explained how to plot it, what is opening range and everything. I will link it to description. If you are interested, you can check it out later on. So opening range, basically this liquidity pool or stop loss hunting, opening range, these are the things which you will come to know once you understand the basic things. So at this point you might be thinking, what are all these things? It's confusing, it's not making sense. But yeah, after some times, after few months, all these things will make sense. The third thing is trailing stop loss. Now what is trailing stop loss? Trailing stop loss is a concept in which we restrict market from taking back the gains it has given to us. So let's take the same example we took a few minutes before. So let's say you buy at 100 and your stop loss is at 95, and let's say the market is currently trading at 110. So now this is your gain. This 10-point difference is your gain, right? Why? Because the market has went in your favor. So trailing stop loss basically means removing your stop loss from 95 and keeping it at probably 100 or 102 or 105 or whatever. Basically you restrict market from taking back all of the gains that it has given to us. So this is trailing stop loss, and you can learn it because I have made a video, a dedicated 24-minute long video on trailing stop loss, and if you have to understand it, you can go it and watch it after watching this video. I'll link it to description. So the fourth thing is pyramiding. What is pyramiding? So pyramiding basically means adding on more quantities as the trade starts to go in your favor to make the most out of that particular trade. I am yet to make a video on this topic, but it will be coming out soon. So these are the 4 things. Then if you want to go for option selling, so these things are basically for cash market and option buying and stuff. These are the things that are going to help you in those categories. Even if you do commodities or currencies, these are the things which are going to help you. But when we talk about index option selling, there are different things. There are things like open interest, which is also called as OI. Then there's option Greeks. Don't get confused as of now because you do not have to learn anything at this point. Option Greeks consist of different things like theta, delta, gamma, vega, rho, and so many things are there. You don't need to get confused at this point. Just understand that these are the things that you need to learn if you get into option selling. Then there's implied volatility. Pardon my handwriting. And then there's volatility index. So if you're getting into option selling, these are the things that you need to learn. But as I told you, if you are new, then you need to focus on cash market, and these are the things that are going to help you master the cash segment. And once you master the cash segment, then these other options become a lot easy to trade. So this is the roadmap that you can follow. Like, to start off, open a demat account, trading account. Again, link is in description. Basic things: learn about candlesticks, charts, supply, demand, support, resistance, indicators, leading indicators, lagging indicators. Then I assume that you're going to get into cash thing. So for that, learn about liquidity pool or stop loss hunting. Video link in description. Opening range, again video link in description. Trailing stop loss, link in description. Pyramiding, I'll make a video soon so you will understand what it is and how it's done. And option selling, now I am not into option selling, but I will try to get the content for you because I know about all these things, although I don't practically apply it because I am an option buyer. Because I feel that if you could understand the markets in a better way, then there's good reward for you in options buying, provided you know what you're doing. So I don't get into option selling, but I know what all these things are, so I will try to make content on these things as well for you guys. So this was the roadmap that you can follow, and let me tell you, if you're just starting out, assume that you're going to need 4 or 5 years to become a consistent trader. It is not easy. It is going to be difficult. The road is difficult. It's rough road, and probably only 1 out of 1 lakh will make through that. It is basically how difficult it is, because it's literally a black hole of emotions. It just pulls you in, it drains you out. You are left with no money at some point, and the process is rigorous. It's difficult. At some point you will feel to give up, and nothing would make sense at that point. But remember that it is possible, and the most important thing to become a good profitable trader, a consistent one, is to understand yourself and is to control your mind. There's nothing else that you can do as a trader about what is going to happen. There's no control you're going to have on markets. So the only way to become profitable is to understand yourself better, is to control your emotions better, and is to control your mind better. So I hope these things are clear. I hope this video was helpful, and thank you for watching to the end. I will see you in the next one. Until then, you guys take care. Bye bye. Peace out.